No, we're not. No, we're not. We are not live.
Yes, we are. Hello, everyone. Glad to be with you tonight. Good to
Now we
see you, Catherine. Ellen is not convinced that we are live.
we weren't until just like a second ago.
There is a delay. So we're getting the technical side of this worked out, and YouTube hasn't been too cooperative with us here a little lately. Through no fault of our own, obviously.
Well, I do want to apologize. That I got out of the tub. My hair is soaking wet. And last night, I don't know. We don't know what happened. That was a interesting blunder. We were streaming for an hour and 20 minutes, and no one saw us or could hear us. And I bless Sandra for sending me a text. We would have gone on and on and on, saying, "Are y'all okay?"
Yeah, we had no
Something's
idea.
wrong.
From Streamyard, everything seemed to be going well. And right as Sandra texted, we got a message from Streamyard that there had been a break in the system. The broadcast wasn't transmitting, being saved, etc. So if you looked at the video that's posted, we're like stunned. I'm like stunned. I don't know what to say. Just wasn't expecting that. Had no idea. We a couple people said they could hear us, couldn't see us during parts, and I got a couple of the text or messages, and somebody asked, "Are y'all okay?" And I'm like, "Can they tell that Ellen tried to kill me earlier in the night?"
I did not. He's lying.
So it was a little weird. Threw us off, but we're going to try it again tonight and see if we can get all of our ducks in a row. Bless you, my child. I should
Thank
go
you.
like this. Bless you, my child.
No.
Yeah, it's down and across.
You're not Catholic, so let's just give that one up.
I did have a priest collar and wore it when I was at the Vatican. Because at the Vatican, if you're a priest, they'll take you down to see the catacombs. It's really kind of cool.
Just
Anyway.
Because you were trying to grift
I love
on them.
history.
I know you do.
So anyway, welcome and to another edition. We'll see if this one goes a little bit smoother. Couldn't go any less smoother. Let's put it that way.
Y'all, we apologize. I don't even know what to say. It was just a mess.
Good to see you, Catherine. Welcome back. I see Carrie Berry's mom. Good to see you as well. Now, if you're on, y'all check in and say hey. Let us know.
Oh, and I'm grateful that y'all checked in to make sure that we were okay. Because we were like, okay, there was like one person here. No one loves us anymore. We don't know what just happened. We usually have at least like 13, 14, 15 people on. We were like, wow, we have like me and Clay and maybe one other that hung in there. Don't know. Thank you. We were trying. Thanks for trying. We just, I truly am. I mean, this community is great. If Sandra wouldn't have reached out because y'all were contacting her going, what is going on? We would have never known. We just gone on and kept going and been talking to ourselves.
Yeah, we were blissfully unaware because actually, I don't know if y'all know how this worked, but there is a website called Streamyard where we actually handle the videotaping, and it connects to YouTube and Rumble and transmits the video to them. And there's a little delay between the video transferring and if y'all make a post on YouTube's chat, it takes it, a few seconds to get over here to StreamYard. So there was some video being transferred, at least to some people. They say they could hear parts, or I would get a few texts. Apparently there were a lot of them that I did miss. So, but everything seems to be in good working order tonight. Carrie Berry's mom. We love you and the pups. Well, we love you too.
Thank you.
This really is kind of a cool little family. And I've commented, a few times before to Ellen, maybe to others. I don't know if I've said it on the channel, but it's really still amazing to me the bonds, the friendships you can develop in this medium. And it's not at all what I expected when I started. It has made it a much more rewarding experience, and that's due to y'all. So very grateful to y'all. Hello, Sandra. Hello, New Tricks. Good to see you.
Sandra,
and New Tricks, you're never late.
I'm gonna try to do a Sherry thing, which we know that I stink at. But this, as if there wasn't enough going on in the world, my minister and very good friend, her son-in-law was killed this week, and he left behind a beautiful wife and 4 babies. I'm going to paste their GoFundMe link on here. Like I said, I'm always asking y'all for money. I'm sorry. It's never for me. I promise. I'm just, no, but she's got a lot on her plate. So if any of you can help out, that would be great. I know she would appreciate it. She's right now staying with her mom, who is my friend, my minister. She just can't quite go back to the house yet, her and her baby. So I'm making them a dinner tomorrow, taking it over there, and they would really appreciate any help that anyone can give.
And, let me add on that a little bit. I know through some private conversations, things are tight for some of y'all. And if that be the case, then, we just cover your thoughts or prayers.
Just
but
pray for them.
If you've got the ability to give $5 or $10, if we could get through Twitter and YouTube and whatever, and have 50 or 100 people give $5 or $10, that'd be 500 or $1,000. So it does make a difference. Don't feel like you've got to give, a significant amount. And we lay this out before you. It is y'all's call. We love you either way. We do kind of, I guess I could say, vouch for these people.
Oh yeah.
And the GoFundMe, we've vetted it fairly closely. We know the history with some of the GoFundMes in the LawTube community, and we won't, really go into naming names or whatever, but we understand the caution. So if you feel comfortable giving, please do so. If not, that's quite all right too. Still love you.
And just send prayers. I mean, they are, sometimes prayers are the best.
Yeah. And they are a very dear, very loving, sweet family. It is tremendous hurt and a lot of pain there, a lot of uncertainty about, what lies ahead. Mom is been a full-time mom with 4 kids. He was a law enforcement officer. So not a whole lot of money or wealth there. And we're just trying to help him out a little bit.
Yep.
So anything new and exciting going on for y'all? It's kind of unusual to see you out here on a Sunday night, but we're excited. We haven't done Sunday night before. And so kind of curious how this is going to go.
You're clicking your pen.
Oh, sorry.
That's all right.
Actually, it wasn't a pen.
It was a clip.
It's a clip. Here's my trusty pen. I've got it nearby, ready to go. Ready to click at a moment's notice.
Just don't use his special pencils.
I got to show. This is one of my special pencils. It's a mechanical pencil, but I'm going to say 40 years ago, I bought this and bought one for my dad.
I meant your architect pencils that I destroyed.
Oh yeah, those got some of those too. But that's really the one I'm picky about. because I've got a bond with this thing. You know, if the house burned down, what are some of the things that you would grab and run with?
Add it to the list.
Add
If
it to
y'all
the
don't
list.
know,
It would
if y'all
be
don't know,
this pencil.
yeah, Clay is going out of town for the next, I don't even know how many weeks. So he's going to be streaming from the road, and I will be supporting him from here. So this is going to be a new adventure. He's going to Alabama, maybe Wyoming, maybe Montana. We just don't know yet. But somebody's got to take care of the roses and the dogs and the things. So I'm going to be here. And he is going on a little man journey, which I think is probably good for him. So the next several Saturdays are going to be a little different.
But we're looking forward to it. And, you know, as far as, you know, she's saying, don't know where, I literally will take a coin and flip. Do I head north? Do I head south? That kind of thing. And not sure where I'll go. I'll throw a tent and some MREs in the truck and kind of hit the road. Find a little campsite or national park somewhere in the woods. Go chase grizzlies. You know, pet the snakes. Do all the little things, as Ellen says. Just kind of reconnect with nature.
He's got 3.5 cases of MREs in his truck right now. He may never come back. I don't know.
Those things go a lot faster than what you think.
Well, it depends on how many you eat at one time.
Well, you got to feed the bears. Otherwise, they don't come around.
No, you don't feed the bears. You shoot the bears.
So, don't know where I'll go. Don't know what I'll do exactly. I've got a couple apps like Abandoned Places. I like photography. And, you know, as I'm on the road, if I, you know, see some abandoned place that looks interesting, you know, an old mental hospital, something like that, I'll divert and go there. So we'll see what happens and where the wind blows. MRAs, we're having military flashbacks here. Well, no need to have a flashback. Make it a reality. I've got plenty to share.
Oh, yes, he does. And I told him, I said, you better eat the older ones first, because he just bought a new 2 cases of them.
I had some in inventory.
The tastiest thing to eat in the world.
I actually like them. Ellen never got to enjoy the old C rations or K. It's basically dog food and Spam in a can. So these are just such a vast improvement. And they've got all sorts of different little flavors and entrees. It's well done.
Oh, wait, you got to tell about the first time we went camping, our second date, and the MREs and the hurricane and all the things and the tow. Yeah.
Yeah. There's a strip of islands called Barrier Islands along the coast, and they're
Outer Banks.
Part of the Outer Banks. They're part of a national park, so nobody lives on them. But you can ferry over to one. I've got a 4-wheel drive. You can ferry over to one and then drive and set up a little campsite there on the beach. Camp out on the beach. Do a little fishing, do a little walking, do a little sunning, go collect shells. You know, see the stars at night, that kind of thing. It's kind of it's primitive camping as it's referred to, but it's very, very peaceful. I mean, you look up the beach a mile, nobody. Down the beach a mile, nobody. You're pretty much on your own. And I kind of like that. So I thought that'd be I thought that'd be a cool second date. So we go and set up camp. Wait,
we were in Morehead City, and I said, Clay, are you sure this is a good idea? Because the weather does not look good for this weekend. Continue.
And we checked the weather, and you know, the forecast didn't look that bad. 40% chance of rain. But you know, I didn't say what kind of rain or wind or whatever. It just didn't seem that bad. So I'm like, no, we're here. Let's go ahead and do it. If it rains for a couple hours, we'll be fine. Mm-hmm. So we go set up. Ellen has her first MRE, which is a trip. She's like, I think I gave her a
you gave me a hot
chili
dog.
or lasagna.
I'm allergic to hot dogs. So he gave
you
me
the hot dog at first.
MRE. Yeah.
It wasn't titled a hot dog. I forget which one it is. It's something like, it's not called a tube steak, but it's something.
No, it was something that sounded similar. And I was like, okay, I'll try it. And I was like, it tastes like a hot dog. I was like, unless you want me vomiting 12 times tomorrow, I'll eat crackers. I'm good.
Yeah. So that was the first experience with MREs. Not all that great. But we get her something to eat, and darkness falls. And so call it a night. We're in the tent. And I wake up.
This is pre-chunk. This is just Tallulah with us at this point.
And I wake up, and the tent is actually laying on me, wet. And there's a storm going on, rain and wind, and water is blowing in the tent. It's, coming through the cracks and winds in the door and the vents on the top of the tent. And not only that, the tent is on me. So I push the tent up and the wind is blowing really hard. So I spend the next several hours with my legs literally up against the wall of the tent, trying to keep it from caving in. And Shorty there is absolutely passed out, has no idea what's going on in the universe.
I sleep like a baby. And Tallulah was standing on top of, I want to say Chunk, on top of Clay. Or he just barked, sorry.
So she can stay dry. She does not like being wet. So that was the first night. Got up, a lot of winds. I actually had a little, what do you call it?
Canopy.
Canopy. Thank you. Couldn't think of the term.
It was like a 10 by 10.
Yeah, it was supposed to be rated for 50-mile-an-hour winds. It had caved in. So I don't know what the winds got up to, but it had caved in. It was just a piece of junk. So we decided to go ahead, load up what we could salvage out of everything.
We decided.
And head on off.
I suggested it might be a good idea to pop off the island before we lose everything.
So
Clay agreed.
I agreed. Everything loaded. Put the key in the ignition. Hit the switch. Nothing. Won't start. And so I fiddle with it a while. Can't find, any issue or anything to do. So finally have to call.
Oh, wait. We had a mechanic come up and try to help us fix it.
Yeah. A couple of different mechanics.
Yeah.
So
people driving
around on the
close.
island.
We were at not Lookout. Was it Lookout?
Yeah, Cape Lookout.
Cape Lookout.
And so called the ferry, and they agreed to make a special run, but got to get a tow truck on there. So find a tow truck. This is a small town, not a whole lot closed. Most everything's closed, but a guy finally agrees to come.
It's like an hour north of Morehead City.
For $800. He's going to come and tow us off. So anyway, we're sitting there waiting a couple hours, finally shows up, and he pulls us off, and so takes the truck on down to his shop, and then we stay at a little bed and breakfast, which ended up being a relatively pleasant, kind of funny experience. But
it was very cute, except when we got there, the lady only took cash.
Oh, yeah, that too.
And Clay was like, "Do you take Venmo?" She's like, "No." He's like, "Do you take Cash App?" She's like, "No, I take cash." And I said, "Don't worry. In case you were a creep, I brought like $1,000 with me, so I got this."
Yeah, I did. You know, silly me. I didn't think about taking cash to the beach where nobody else is. So I guess I should have thought, well, if Ellen turns out to be a creep, you know, I need to plot my getaway.
Well, I
But
just figured, I mean, having cash, I could get somebody to take me off the island in case you were a total jackhole.
yeah, you
But you
could
weren't.
probably, yeah, you could probably do it without cash. But anyway,
I am not that kind of girl.
no, you're a relatively attractive young lady, and people are always willing to help a damsel in distress. This is the
No,
South.
I think that's just you.
Yeah.
There's a story.
So that
behind
was,
guys.
yeah, that was our second date. So it was kind of like the show last night, one problem after another. You just kind of get to the point where you can either laugh or cry. And so we kind of laugh.
Clay kept saying she's never going to see me again. She's never going to go out with me again. And I was just laughing the whole time. I was like, this is hilarious. I mean, who would have thunk all the problems?
Yeah, and it's, you know, it's a pretty little place. Like I say, there's nobody on there. There's a lighthouse at the end, Cape Hatteras Lighthouse, Cape Lookout Lighthouse, and it's, you know, she hadn't been too eager to go back. I just can't understand why.
We did go back, and it was another shit show.
It really was. I just can't take Ellen anywhere. So
that's not true. Just that Cape Lookout and you just don't agree. I don't know what
it has been great every other time I've gone. I'm not kidding. I'm not.
Wait. The first time we went, okay, how many conch shells did we collect?
After the storm, while we were waiting on the tow truck?
Yes.
We got 20 or 30 of them. And I'm talking big conch
ones.
Shells.
And I made candles out of them and gave them for Christmas presents. It was a good thing.
Yeah, it was cool. I have never in my life seen that many conch shells. I don't know why they all washed up or whatever, but we just walked literally while we were, you know, waiting on the truck. We just walked half mile down the beach and couldn't carry them all.
No,
there were so many.
We could barely get them all in the truck with everything else.
It was a little full, but yeah, that was kind of unusual. So we've still got several of them around. Maybe next show, maybe I need to start a collection behind me of conch shells.
The trip
and the story behind each one.
Oh God,
yeah. But long story short, she did go out with me again. Don't know why, but she did go out with me again. So had a good ending.
I did, because you didn't freak out about the situation. You didn't get angry. You were just rolling with it. And I was like, all right, this guy's pretty cool. Like he doesn't get angry easy. He's not going to like lose his mind over something trivial. Because I was just laughing the whole time. I think I actually have a video of us being towed.
Yeah, in the truck.
Mm-hmm. It's fun.
Not exactly the highlight of my life.
Yeah, that was the problem. Dude, the plumbing. He was like, I brought a shovel and some toilet paper, and I was like, we'll see how that works out.
And, you know, after the first time, it's a breeze. First time you're like, kind of, what's going on here? But after that, it's what men and women, people have done for thousands of years. So it's in your genetics.
Have to pick up dog poop. So how does all that work out in a plastic bag? And it's all very confusing to me. But yes, the Outer Banks is beautiful with plumbing and AC.
I love the Outer Banks, the part with plumbing and AC. I love the Outer Banks, the part without the plumbing and the AC. I
love that part too, without the wind and the rain and
without the hurricane
blast. Yeah.
Yeah, this wasn't just like a thunderstorm. This was it did have winds 40, 50, 60 miles an hour.
It was more like a tropical depression.
Yeah, I had no idea it was going to be that bad. So now you know a little bit about our history. So y'all go ahead and feel free to tell us your most embarrassing moments so that we may adore them with you.
Oh, they won't. They will just be like, we're going to share yours. Hey, Chunkers. What's up, buddy?
Chunkers wanting the attention.
Always.
So what else is going on in the world? We had a couple of interesting numbers in the market. I mean, I got to talk about the market. I love the market. Ellen's brutal with Chunk.
I am not. He just is a puss and can't stand to be picked up, even though he wants to be.
He is the biggest weenie you've ever seen. Seriously. He's cute. He's Mr. Personality, but he is a big weenie. Hey, Chunk. Tell everybody hey.
He can't hear you because you're in my ear.
But he can hear me. See, he's waving. Numbers this week. A couple of interesting numbers this week popped out.
Damn.
If anybody was following the markets or the news, you saw the job survey come out. How the non-farm payrolls came out showing an increase in jobs of 339,000 versus 195 expected. So huge blowout numbers. You don't get those kind of blowouts often. Interestingly, the non-farm numbers has exceeded estimates for the last 14 months. That's an extreme rarity. But these numbers were touted all over the news, everything. And I'm like, I got to admit, I was like, whoa, Nelly. You know, to quote the immortal Lee Corso, not so fast, my friend. And for those of you who may not know, Lee Corso is a sports announcer on ESPN. He'll be on there, you know, everybody's giving their game picks. And when it comes his turn to pick the winning team, if he disagrees with somebody, he'll go, not so fast, my friend. So now you know. But after looking at the numbers, I'm not going to lie. It just, to me, looks like bullshit from the BLS for a number of reasons.
BLS?
One, yeah, the Bureau of Labor Statistics.
Okay, is this kind of the BS we saw right after 2020? I feel like we've had this conversation before, like last night, but no one saw it.
What numbers from 2020?
After 2020, when all the jobs were created.
Oh, yeah. Much the same thing. There were lockdowns in a lot of states throughout the country. And so people stopped working. And then when the lockdowns were lifted, they counted that as new jobs created. So that's kind of hokey, my opinion. And I don't care, you know, which administration it is. That's kind of hokey. Anonymous, larger numbers of first-time unemployment numbers. Large percentage of new payroll numbers are pulled out of the ether. I mean, it kind of looks that way. If you look, you know, at the non-farm, which got all the publicity, you're like, hey, that's good numbers. The problem is, well, the thing is that there are two surveys released, and the second survey didn't get much press at all. It's the household survey. The BLS surveys employers, non-farm payrolls. They survey households, household survey. And the household survey actually showed an increase in unemployment and people laid off from 6.6% to 6.7%. There was a loss of about 310,000 jobs in May, according to the household. So non-farm, 339 gain, household, 310 loss. Huge contradiction. And historically, the household has been more accurate and is why unemployment went from 3.4 to 3.7. Second, and this is interesting to me, non-farm is starting to include all gig jobs as full-time jobs. So if you work a few hours a week handling social media for an Instagram influencer, and they 1099 you, you're considered to be full-time employed. You know, this may take you 2, 4, 6 hours a week, and you make $1,000, so they 1099 you. They consider you to be full-time employed. Or if you take a second job because you can't pay the bills on your full-time job, so you wait tables at night, that's also considered to be a new job created. It's insane. It's just absolutely insane the way they count jobs. Third contradictory thing is household income. I got a question. What is U6? There are several different unemployment rates. The one most commonly cited is U3, which U3 throws out discouraged workers. What's a discouraged worker? It's somebody that after I want to say 6 weeks that can't find a job, sent out resumes everywhere. Maybe it's 3 months. Anyway, after some period of time, can't find a job. So they get discouraged and they quit looking or quit sending out hundreds of resumes a week. These people are taken out of the labor force. So the labor force shrinks. Of course, the number of employed stays the same. So that shrinking labor force causes the unemployment rate to drop, if that makes sense. U6. Go ahead.
I was going to say, I mean, when I lost my job in 2019, I put out resumes everywhere. I mean, hundreds. And I was either help me out, overqualified or underqualified. And I could never find a medium that wanted to hire me. And then COVID came. So people like me, we don't count in that whole workforce scenario. Is that a good example?
Yeah. Yeah, you would be taken out of the workforce like you did not want a job.
Right.
Now, so theoretically, the way that works is if everybody got fired and couldn't find a job, then the unemployment rate would be 0 because they would all be thrown out of the workforce. It's a stupid way to calculate the unemployment rate. Now, U6 actually tries to include some of those, a portion of those discouraged workers back in the calculation. So to me, U6 is a more accurate number. But when somebody talks about the unemployment rate, they're almost always talking about U3. So that's U3 and U6, two different unemployment rate calculations, two different ways of calculating the unemployment rate. Anonymous, drill down in BLS. They admit that 150,000 K of the number was made up. There's a whole lot of time we could spend just on BLS and data and analysis. And they've got their defenders. You know, my real concerns, for example, they change the way they calculate numbers often. They make seasonal adjustments because there are certain trends over the seasons that occur. And sometimes these seasonal adjustments will really detract from the actual number. So I would like for them just to report the actual survey results. The market's smart enough to know whether what the seasonal effects are. It can look at the data over several years and see if this month, this number, goes down by 5-10% or not. So I'd like to see it become more transparent. The numbers and the calculations are just too opaque, too complex for me. But the household survey number, third contradictory thing was hourly wage increases that continue to drop. It's not what you expect when employment would be booming, as non-farm payrolls would suggest. Real income has been dropping every month for the past 2 years, except one. It's absolutely a horrible performance and further testimony to the harm being done to the poor and the middle class, and raises least. It's a terribly report. It's horribly misleading. So that's my 2 cents worth. The second big problem that nobody is talking about. Now, we had the one problem that everybody's kind of talking about, the great job numbers. Well, there's a problem that people aren't talking about that I think is an even more serious problem for the economy and for investors. And that is that with the budget deal signed, sealed, and delivered, the Treasury hasn't been able to borrow money for the past month, but it's still been paying bills. How does it pay bills? Well, it has a piggy bank. It had about a $1.5 trillion piggy bank, and it's been spending this money over the past month because it has this piggy bank because tax collections are irregular. And in some months will be much less than other months. They have refunds to pay out, etc. So this ensures that they'll be able to write checks and have the checks covered. Well, they've spent this piggy bank. The Treasury balance has gone from $1.5 trillion to about $23 billion. So it's almost zeroed out. The problem is that the Treasury is going to have to replenish this over the next couple of months because the fiscal year for the government ends in September. So they've got to have all their books balanced and everything by then. So the Treasury has to raise the money in order to pay the bills. This is in addition to the debt that they're already going to finance. Yes, ma'am.
Can they? Is it possible?
Oh, it's possible.
Their books with how?
They'll balance the books. They're just borrowing money to balance the books. You've got bills to pay, so you need enough cash to do it. They don't have enough cash in tax revenues, so they borrow.
But you said they couldn't borrow anymore.
Well, they couldn't borrow for the past month because they had hit the debt ceiling. Well, signing the debt ceiling bill this past week, getting it passed in both houses, Biden signed it. That takes care of that problem.
Sorry.
So now they're going to start borrowing again to pay their regularly scheduled budget bills. But now they've got also $1.5 trillion they've got to raise over the next couple of months to refund the piggy bank.
Do people understand where money comes from? Like you don't just print it and it exists. I mean, you can, but the value of it diminishes dramatically.
Yeah, that's kind of a theoretical argument, in a capitalist, from a capitalist free market point of view, capital, which is your labors and money and whatever, capital adds value. Like Steve Jobs took an idea, spent a few bucks putting the pieces together, and then sold it for more. And he sold a bunch of those things for more. So Apple grew from nothing into the largest company in the world.
And you have one of those things in your office, the very first one of those things.
I actually do. When Macintoshes were first made, I bought one. And in the original runs, both Wozniak and Steve Jobs would sign the back of them. And I have one of those that's signed by them. I don't know if it's worth anything, but it's kind of cool. Anonymous.
Yeah, if y'all want it, just send out a number.
Yeah, not for sale. Anonymous. When monthly unemployment numbers come out, look at adjustments made to prior month's release. They backtrack. ADP numbers are often more reliable. True. We saw them make a major adjustment to last quarter's real income. They had touted 2 quarters ago that real income, that's inflation adjusted income. So if your increase in salary matches inflation, you got a 0% real increase. If inflation is greater than your increase in salary, it's a negative real income change. And conversely, if you got an increase in your salary that's greater than inflation, that's a positive real income. Well, 2 quarters ago, the government, the BLS again, was touting how real income had increased 4.7%. Well, in this week's release, in one sentence, they issued a correction, a revision, as they call it. They revised the number from 4.7 increase to a 0.7 decrease. That's a 400 basis point screw up. That doesn't happen. That's massive. Usually revisions are 25 basis points, 10 basis points, something like that. But this was a 400 basis point change. It just doesn't happen.
I am sorry to interrupt. The dogs are going batshit crazy. I'm going to take them outside and let y'all do this, and I'll be back in a minute.
Okay. Thank you.
No.
Anybody want some dogs? So, the numbers, the initial information we're getting from the government just is highly suspect. Just word of caution, but it gives us something to talk about. So the Treasury is going to be issuing over the next few weeks probably about 600 to 800 billion in Treasury bills. This will literally just vacuum, just suck liquidity out of the economy, which has severe implications for the market. You've got all this money that otherwise would be available to invest in the market or buy goods and services. Now it won't. It'll go into reserves at the Treasury and be trickled out on whatever they want to spend it on over the next year. The loss in liquidity will also magnify lending constraints. It'll make money harder to get. Lending standards will probably rise even higher, and rates will likely rise even higher. We've been talking about how the Fed's been increasing rates. Well, the Fed, even if the Fed pauses, even if the Fed decides not to increase rates, money still has a supply and demand function. So if there's more demand for the money that's available in the system, even if this demand comes from the government borrowing or borrowing additional funds, that money becomes more expensive. The rate increases. So even if the Fed pauses, you can probably expect to see rates, particularly on the short term, increase even more due to this additional government borrowing. And, compare this to what we've had the past 6 months. People's Bank of China, Bank of Japan, both have been flooding their economies with liquidity. The U.S. paused borrowing for the past 3 or 4 months, since January, basically. And so they haven't been absorbing any money or taking in any money. That's made money more available. Then they had the Fed had the bank crisis and provided $400 billion worth of cash. So money has been easy. Money has been available, even with the rates rising. Well, now the rates are still high, may even go up a little further, but money's not going to be available. That'll make the price go even higher. The Bank of China, the Bank of Japan have also started being more restrained and sucking up some of their liquidity. So all of this is just working together to hoover whatever available cash is in the system. We'll see how much that impacts the markets, but I don't think it'll be good. I don't think it'll be fun. We're looking about 1.2 to 1.5 trillion in new issuance over and above current Treasury borrowing. So, consequences: expect bank deposits to continue to flee banks, expect bank reserves to drop, which means they can support fewer loans. This is going to put more and more price on rates. Expect your borrowing rates to continue to increase. One other issue or concern to me is that the politicians in this debt bill have agreed to have no debt ceiling for the next 2 years. No debt ceiling. So I wouldn't be surprised to see over the next couple of years the national debt blow past $37 trillion. At what point does the borrowing too much take effect? Can the government borrow too much? I believe they can. But at what point does that really start having significant adverse consequences? And one problem is most people don't understand or aren't aware of this risk. Reminds me of the girl on my Twitter. I don't know if y'all follow me on Twitter, but there was a girl on Twitter that came up with a relatively brilliant idea. Let me play this for you. So, why should anybody have to go to work? Why not just give them free money? Oh, I'm getting some messages. Audio not shared. Well, damn it. Oh, well, I'm sorry you missed it. Go to my Twitter and watch it. How's that? She's basically saying, why do you have to work when they can print more money? They can just give everybody the money they need. So why don't they? Somebody can figure out a way to make this happen. Yeah.
I'm back.
New tricks. Deja vu all over again. Absolutely. I tried playing the girl on my Twitter who was talking about print more money. Ellen, since you just got back. And
no, I heard that part.
There's no sound.
And Not a Mouse said you have to hit volume on Streamyard, undo the mute.
It was undone, I think. Yep, there's no mic or mute on it. Thank you, Catherine. Yeah, my generation, we didn't sit there and whine about gluten. We didn't eat Tide Pods. We actually were able to run around the neighborhood and play. We played on jungle gyms. We rode bicycles without helmets.
You didn't
Y'all
share the audio.
wish y'all were boomers.
Julia.
He didn't share the audio. All right. There's a technical issue here that I admit I am not aware of. I don't see anywhere to share the audio.
At least we are actually here tonight, which was that's a big thing.
At least we're here, and we know the problem is my lack of seeing buttons on this key. So, new tricks.
Yes, that is the problem.
Is that the problem, riding bikes without helmets?
Are we really here?
Are we really here?
Perception.
You're getting Berkeley and me.
Perception is everything.
The philosopher George Berkeley once argued that the only thing that exists is our perception, that we may be nothing but perceptions in the mind of God. So are we really here, or do we just a dream in God's mind?
We're a holographic society. So everything that everyone sees from their own perspective is going to be different. But we will not get into that right now. We're going to get, you know what we're going to do? We're going to talk about long-term capital management. And I talked to Clay the other day, and he was like, I need a thumbnail for long-term capital management. And I said, what does that look like? What does long-term capital management, like, how do you make that into a graphic? He's like, it's a company. I was like, oh, okay.
Yeah. Long-term capital management built itself as the financial technology company. It was actually a little hedge fund. I say a little hedge fund. But the cool thing about it, je pense aux c'est Jésus Descartes.
Je pense donc je suis Descartes.
I got the
I something, wrong. Therefore I am.
I think, therefore I am.
There you go. I did take French. It's been a long time.
And Julia wanted to thank you for your comment a little earlier. You're very kind. We do enjoy doing this. We have fun with y'all and your little snazzy comments. And that's part of the joy of it all. But long-term capital management. I feel like I need a drum roll. I need to come up with some snazzy sounds. You know, watch some of these other creators. They've got these little snazzy sounds and transition things. So if y'all have any ideas.
I'm working on it. I couldn't get it to render. I'm sorry.
Oh, that's all right. I was just looking for ideas. If y'all have something cute or fun, keep us in mind. Long-term capital management. Hedge fund began in 1994. The partners ponied up about $1 billion in capital, or were able to raise $1 billion in capital, some of it their own money. The interesting thing was the partners were kind of like a who's who of academics and Wall Street traders. This was like the creme of the creme. Within 3 years, the equity in the fund had surpassed $7 billion. So they went from 1 to 7 billion in 7 years in equity. And I say in equity because they borrowed a ton of money, as we shall see as we go through. Now, the principles.
Wait, start. This is a very good question.
Anonymous, what is a hedge fund? Why are they called that when they don't hedge risk but exploit it? Hedge fund is structured similarly to a mutual fund. You have investors who contribute their money. They hire a manager, and he manages the fund. The difference between a hedge fund and a mutual fund is that a hedge fund is not regulated as strictly by the SEC, Securities and Exchange Commission. They have a lot more flexibility. They will oftentimes engage in leverage, in borrowing. They will engage in shorting, selling securities that they don't own. It's called shorting. So they can take a much more aggressive or risky position than a mutual fund can. A mutual fund is just simply buying and owning, whether it's a stock or bond or combination of the both. Normally, mutual funds can engage in options or derivatives trades. Hedge funds can. And so long-term capital management had a very unusual investment philosophy, unusual for the time, as we shall see. Say that 10 times fast.
As we shall see, as we shall see, as we shall see.
There you go. The thing about long-term capital management was the principle starting it, a brain trust. The main protagonist was John Meriwether. Now, Meriwether was formerly vice chair of Salomon Brothers, who was the largest bond trading firm on Wall Street in the 80s. Pioneered a lot of things in bonds, fixed income. And if you ever read the book by Michael Lewis, Liar's Poker, Meriwether is featured prominently in that book. If you haven't read Liar's Poker, then go sell all you have and buy a copy. It's a great read. It's entertaining, it's funny, and it's enlightening on what trading was like in the 80s and early 90s, which is when I was trading. Absolutely loved it. Had a great time. It was a free-for-all, no holes barred. It was a lot of hours, probably 70 to 80 hours a week. We'd usually, after we closed our desk, we'd go out and grab a drink after. Maybe sometimes more than one drink, but nonetheless.
Sorry.
Chunk?
He just, every time he's picked up, he just gets freaked out. Even though he wants to be
and
picked
some
up.
nights it wouldn't be worth going home, so I'd just keep an extra shirt in my drawer, and I'd go to the office, sleep on my desk, and then for an hour or two, get up, put on a new shirt, start another day. So it was some pretty cool times, enjoyable times in the market. So Meriwether was one of these guys.
He's the one on the very at the thing. He's the one on the very left.
Oh, on the thumbnail you put together? Yeah, I don't have it up in front of me. I'm not sure.
It's on the back.
But the other two were Merton and Scholes.
Yeah.
Now, I don't know if the name Black-Scholes Merton option pricing model rings a bell to you. But for those in finance, it's the preeminent option pricing formula. It is such an amazing development that they won the Nobel Prize in economics in 1997 for its derivation. The way to describe it is they basically used a continuous time model of a stochastic processes with continuous decision making by agents to inform pricing for contingent contracts.
What is a stochastic model?
Let me start at the beginning. Continuous time is just continuous time. You've got discrete time. So if I've got like an identifiable time moment in history, one point in time, that's discrete. But that path to getting there, all the seconds, split seconds, however small you want to divide time getting there, is continuous time. Stochastic process is just think of it as a random process.
Like Nonmouse said. In other words, they flipped a coin.
Yeah, no, it's not quite flipping a coin. This is my field, so I've got to be a little bit defensive here. It's like you go out drinking, and you knock off a fifth of whatever your favorite, tequila or vodka or whatever, whiskey, name your poison.
Scotch.
But it's
whatever.
3 a.m. and you got to go home. and you know your house is over there, 6 blocks. So you're going to walk. Well, you pick up your first foot and it lands over here. You take your next step and it lands over here. Now, so you walk this path that you have no idea where your next footstep's going, but eventually you end up at your house. That's a stochastic process. How's that?
Read.
Not a mouse. Clay, protecting the grift. They don't give those faculty seats for nothing. That's why I make the big bucks. I love my job. It's the greatest gig in the world. Did I happen to mention I get a week off in the fall, a month off for Christmas, a week off in the spring, and 3 months off for the summer? Don't know if I mentioned that or not, but it's a great gig. My only problem is I didn't do it sooner. And now that I've got tenure, I can argue against tenure. So
easy.
It's an interesting
Let's not
world.
get you fired before you're ready to retire.
With some of the stuff I've said and done, if I hadn't been fired yet, I remember I had one mama call, tell me I was a little bit too hard on her baby, her daughter. And I just told her, college is not for everybody. And if she couldn't handle it, Starbucks is always looking for baristas. So that didn't go over well. So she calls the chair, starts to complain. He says, wait, is this Moffat you're talking about? And she says, yes. Oh, okay. Nothing we can do. You have a good day. She calls the dean, starts complaining. He says, wait, is this Moffat? He goes, yes. Goes, oh, well, there's nothing we can do. You have a good day. So I think, as long as I take care of my job, I think I'm pretty good. That's the advantage to tenure. I don't have to worry about the snowflakes.
You do. And there are times that you have literally screamed at your students and your other professors have come in and said, is everything okay?
Yeah. Anonymous, the time off is to minimize the damage you can do. You may not be the only one with that opinion. I will admit. Yeah, there are times
wait.
So her mama calling wasn't a sign, STFU. It is your daughter's problem, That's kind of the idea. You've got a 20-year-old daughter that got her feelings hurt, and you're calling because why? Julia, I hope you told her not to call child's future employers. No, I didn't get around to that. I should, I should have mentioned that, but no, did not.
Yeah, Clay's classes are not easy. I mean, for today's junior, senior, they're not easy. Probably not for me either. But every time I walk into one of your classes, you're like, does anyone experience this? I'm like, yes, I have. Do you know your banker? Yep.
Yeah, my classes are generally electives. So I generally get pretty good students. Every once in a while, somebody's just desperate for hours. There's not another class in that slot, I guess. And so they sign up for mine.
I need to get Maddie to come on here.
It's sometimes an eye-opener.
I need to get Maddie on here. She could spill all the tea.
But yeah, I've got good students. I've got a lot of students when they come into town, they'll holler at me, want to go grab a drink, want to go play a game of pool, something like that. So it's a great gig, but I'm not going to sit here and say that every student loves me. There's, if you can imagine, if you can believe it, there's actually a few that don't. Anonymous, they aren't easy because the hocus pocus like LTCM. Easy now, cowboy. But I'm sitting here thinking, as we go through and explain the reason I cover financial fails is because I want you to understand the market better, but especially where the risk is, where the problems are, if they're kind of consistent traits in some of the fails that, we can learn things from. And as we go through and look at long-term capital management, and I'll get into the weeds a little bit because I want you to understand what they were doing so that you can better understand what they didn't do, what they should have done, and why they failed. So some of it's going to be a little technical because you need to understand exactly the strategy long-term capital management was trying to use. Catherine, young people today just want to bank online. They don't want to meet a real banker. You know how many people even know their banker's name? Very, very few people today do. 50, 75 years ago, the banker was the most important guy in town. He controlled the money. And if you needed anything, he had to personally approve it. So he needed to know you, and he needed to know your work ethic. He needed to know your determination to pay back your loan, because banks don't handle loan losses well. They don't. They're not built to handle losses. Having to change earphones here.
Your battery's oh, you didn't charge them?
There's a problem. Technology is just not my friend right now. So, long-term capital management. You had 2 Nobel Prize winning partners join in as well. I gotta take him.
Hang on. Wait. Hey. You can't hear me, but I'm going to bring you some new earbuds.
No, okay? I can hear you now. This one's back on.
Okay.
For now.
Do we bring you some?
No. I think I figured out the problem. We just got new earbuds because the other ones weren't good. I don't know if you can see this, but see that little end?
You never took the paper off of them?
I never thought to look at it.
It's just a plastic. What are you doing?
I just stuck them in my ear. I connected them on Bluetooth. They worked. They've worked the past few weeks. I didn't even, I stuck them back in the little case. I thought they were charging. Yeah, that's what they should look like.
This. Yeah.
It's charging now. So
I'm going to bring him another pair. You are boomering so hard tonight. I don't even know what to tell you.
Boomerang we just added a new word to the vocabulary. I don't think I'm a fan. Anonymous. Understand the market. I got it. We make money. We take it. Buy politicians in power. We lose money. Fed bails us out. Easy peasy.
Ooh, here's a good one too.
Yeah.
I'm going to step out and grab Clay some more earbuds. Excuse me.
I'm all right.
No, you're not.
Next time you get a parent call, please tell them their child is blessed to have a parent that cares so deeply, but do not outreach on behalf of their child unless extremely necessary. Julia, you're much more gracious and sweeter than I am. Ellen the other day was saying that I am a loving person, but it's a tough love. I'm not the empathetic, warm, fuzzy kind of love usually. I pass out hugs often. But what was the old C.S. Lewis is my favorite author. And one time he said, the hardness of God is softer than the kindness of men. And I've never forgotten that. And I kind of still believe that. I believe oftentimes that is necessary and the best way to go. So Ellen's brought me some new earplugs that are not connected to my computer. So she's like, it won't take but a second, but we'll see. Quad E, try some over the ear. I don't think they'd work any better if I didn't charge them properly either. I think I got to bear some responsibility here. And then you've got Julia, Ellen, boomer's gonna boomer. Guilty as charged. Just can't argue with that. Catherine Frazier, unwrap your presents. You know, maybe YouTube was better off when YouTube wasn't working. Quad E, try some over-the-ear headphones that plug in. That's probably what I need. All right, I think these have already died. So let me see if I can get Ellen's connected. And Ellen, there it is. Y'all, Ellen forgot something when she came downstairs. She forgot 2 somethings when she came downstairs. All right, now I'm not hearing anything. All right. Excuse the delay. Let me get my
How about now? Is that better?
Earphones connected, and then I'll be right back.
Hi, y'all. Can y'all hear me now? Am I still muted? Someone put them out of our misery. Can y'all hear me? Anyone? Give me a sign.
I can hear you.
There we go. Okay, cool. We're both coming through. Can you hear me now, Clay?
The best comment of the night. It is not you this time, Clay.
This time. Apparently, I hit the mute button and not on the. Instead of the computer, I hit the mic. I just, we suck at tech, but we don't, which is really weird because, all the things.
Yeah, part of this is it's a new, it's still kind of new to us.
It's not, but it seems to be.
Last night was not our problem. That was
we did not
Streamyard, YouTube,
we love
Rumble
you,
kind
Julia.
of thing.
We love you, Julia. She said, I love you guys.
Love you too. Really love all of y'all. Y'all are just a cool group, and we are just damn glad to have you. All right, long-term capital management. Feel like I've been here before.
Can we switch? I don't like being on this side. It's weird.
I'm sorry. Is that better?
Sure. That's better.
The 2 guys, Myron, Scholes, Robert Merton, won the Nobel Prize, were also principals. Came up with the option pricing model. The 4th guy was David Mullins, who is a Harvard professor and who's serving on the Federal Reserve's Board of Governors. He was also sometimes on occasion have been mentioned as a potential chairman of the Fed. So
wait, Mullins?
All 4 of these were literally brainiacs.
Oh, wait. You said Myron, Scholes, Fisher Black, and John Meriwether.
Didn't mean Fisher Black, Robert Merton. Sorry. Fisher Black died in 95. It's Robert Merton. Fisher Black died before they were awarded the Nobel Prize. Okay, we're moving on. Well, I'm so
You
used to
love it.
seeing the black. I'm so
You love
used
it
to
when
seeing
the
black Scholes.
you love it when Dr. Moffat gives you the wrong information to create a thing with.
When I was in surgery, the adage was give the doctor what he wants, not what he asks for. Same thing applies here. Give me.
And yes, Julia, hang on. We are professionals. The more you know. Don't worry. Yeah. We have all kinds of text issues and we are very professional here.
It's a good life. Bottom line, it's a good life. We have first world problems. Now, long-term capital management, hell of a lineup. Performance started out stronger than goat cheese. It had returns the first year after fees of 21%, then 43%. Then the third year was a return of 41%. So it was wildly successful. And keep in mind that after fees is not insignificant on a hedge fund, because hedge funds normally charge 2% in management fees a year, plus around 20 to 30% of the profits. So they had roughly $125 billion in assets on its balance sheet. So you do the math. If it was doing, an 40% return on $100 billion, and it got 20% of that, these guys were raking it in. Now, I talked earlier about how they had $7 billion in equity and they borrowed the rest. That's the difference between the 7 and the $125 billion on their balance sheet. They had $125 billion in assets, but most of that was borrowed money. They also had a lot of off-book transactions. Off-book transactions are an accounting technique whereby some of the stuff you do isn't shown in the balance sheet. There's a little footnote and additional statements that explain it. The long-term capital had about 1.2, 1.3 trillion in swaps. So what I mean when I say swap, well, a swap is just where you swap two things. You swap interest rates, for example. You have a fixed rate and decide you want a floating rate. So you swap with someone else who's on the opposite side. And we'll talk more about the particular structure of their swaps. But long-term capital management, their goal was to identify small mispricings or imperfections in the market. The market is, some people talk about an efficient market. Well, the market is not perfectly efficient. Sometimes it may be very inefficient, but there are usually mispricing imperfections in asset prices. And long-term capital management wanted to find some of those mispricings, and then they would literally just pound that mullet all day long, all night long, pound it unmercifully, using as little capital as possible and as much leverage as possible. So it searched for what it thought were low-risk arbitrage deals. Now, arbitrage deals, what's arbitrage? The way I define arbitrage is exploiting a price differential simultaneously in two separate markets without risking your own capital. So you've got a stock traded in New York, you've got a stock traded in London, same stock, say it's an IBM stock. But there's a difference in price after you account for currency exchange. So you buy the cheap one, sell the higher priced one, and you keep capturing that profit until the price is equal. That's
So
arbitrage.
not first in, first out, not last in, first out. It's just whatever is the cheapest goes.
Yeah, you buy the cheap, you sell the high. That's what you always do in investing. It's just that arbitrage combines that instantaneously with two separate markets, like a New York Stock Exchange, London Stock Exchange. Would be the same stock, but in two different markets. So that's arbitrage. You do it simultaneously and you don't use your own money, technically.
Kind of like how
borrow money.
SBF did with FTX when he was able to trade funds in other countries or trade funds from other countries to the US because there was I know you know this better than I do, there was a cheaper exchange.
Are you talking about the kimchi premium in South Korea?
Possibly, but he
Bitcoin?
had with SBF FTX.
That's what you're talking about. Yeah.
Okay.
He would buy a Bitcoin in the US and he could sell it at a premium in South Korea. And he would take cash. He had people lined up with cash outside his door.
Mm-hmm.
So now, was he money laundering? You know, he'd take cash in. He had relationships with, 200 different banks there in South Korea, that he would then take the cash to the different 200 banks. So he wasn't depositing a huge amount every day at just one bank and attracting money laundering examination. So yeah, same kind of thing. Okay. Anonymous, was this arbitrage long-term or just small point differences during a day? Most of it is somewhat shorter term. I wouldn't call it necessarily day trades. They might be weeks or months, relatively short term. You're not looking at years. And in terms of the differentials, they could be very modest. Did some looking at some of their trades, and on some trades, they would only make, I don't know, somewhere between a 0.6 and a 2% return. So their returns were actually, their net returns on the trade were actually very small. But the leverage blew that return up. For example, if I have $1 and I make a 5% return, I earn a nickel. But if I take that $1 and I borrow $29, I have $30 to invest. So I make that very same trade. I still only make 5%. But 5% of 30 is $1.50. So I've got $1 invested. I have $1.50 profit. So instead of a 5% profit, I made 150% profit. And that's where leverage comes in. Leverage magnifies your return. The problem is it can also magnify your losses.
Like in 2008.
Like in 2008. And we'll look at that with long-term capital management here shortly. But I want you to understand what they were doing. Catherine, how can you get approval for this market switch? Start your own hedge fund, have about, I don't know, at least 100 billion, and get registered as a market maker on different exchanges. It is not really something that small investors can do. And I wouldn't really advise it. The risk is great. The profits look kind of sexy until they're not. And that was the problem with long-term capital management. Now, the great thing about arbitrage is you don't have to study the company. You're using historic spreads, a statistical model of averages. you know that this stock or this bond and this bond have a historical relationship where the difference in yields between those two bonds is, say, 30 basis points. Well, now that spread has widened out to 50 basis points. You don't know why. You don't care why. I say you don't care why. If one of the companies was failing or having great success, or there was some reason for it, then you take that into account. But if there's no particular news for either company, either country or company, and that spread has widened out, then you expect that spread, based on its historic average, to tighten back up from 50 to 30 basis points.
Why?
Does that make sense?
No.
Why? It's just because there's a relationship between the two that the market has accepted for the past 10, 15 years. And
well, if that's the relationship for the past 10, 15 years, and all of a sudden there's this spread, why would you expect it to tighten back up?
Because you would see that spread as one of those market imperfections I was talking about a few minutes ago. That the market sometimes does misprice assets. And so what long-term capital management was trying to do was look for that mispricing where the market has overlooked something temporarily. Prices, have gotten away from them. Nobody's noticed the difference. So if you find that mispricing first, you can take advantage of it. You can arbitrage it. Does
that happen? I was probably like doing the dogs thing, but does that happen often where the stock market misprices?
Yeah, computers do it a lot now. So like the S&P 500, the 500 stocks that make up the S&P versus the S&P index. The index is just the value you read when you look at your phone and see S&P 500, boom, index value, 4,000. Well, there are computers that literally will instantaneously calculate the price of all 500 stocks. And the actual value of those 500 stocks may be $4,002 versus the index at 4,000. So these 500 stocks are overpriced relative to the index.
By $2?
By $2.
Is that worth anything?
Well, the thing is, some of these trades, they only may make $1, $2, a nickel per share, whatever it is. And you think, well, that's kind of hardly worth it. But when they do that 60 times or 100 times per second, all of a sudden, that's $100 per second.
Is this black box trading or is this like
computer trading, algorithmic trading?
Okay.
Using very fast computers. So $100 a second times 60 turns into $6,000 a minute.
Gotcha.
Times 60 minutes turns into $360,000 an hour.
Okay.
So even though the amount per trade is very small because it's so rapid, so frequent, it multiplies rapidly. And that's what long-term capital management was trying to exploit. They were one of the first to try to exploit this with their formulas.
By 2 Nobel Prize winning economists.
Yes.
Who almost broke the U.S. economy.
Pretty much. Now, long-term search for what they consider to be low-risk arb deals. Small returns, but they amassed large number of trades to record significant profits, okay? The goal is to structure a portfolio that wasn't that sensitive to the market, but was exploiting these price differentials. Yes, ma'am.
Please don't say penny stocks again or pink slips.
No, not going to.
Okay, good.
Now, the use of leverage was the big key. The leverage they were using on average was 25 or 30 to 1. So that's huge. That's where you get, instead of a 5% return, you get 100 or 100% return. Makes a big difference. Another thing long-term capital did was it took advantage of something called positive carry. And positive carry is simply where they would buy a bond and then they would lend that bond out for cash. It's called a reverse repo, but all it is a collateralized loan. And the term might be 3 months or 6 months, but they would take this cash and buy another bond. So now had. Yes, ma'am.
Is that kind of like a reverse mortgage?
No.
Okay, never mind.
No, it's called a repo or reverse repo.
Okay.
They're just two sides of the same coin. You're lending a security and getting cash. At the end of the term, you pay the cash plus the interest and repossess the security.
Gotcha. Okay.
So if you're repossessing the security, it's a reverse repo. And if you're getting your cash plus interest back, it's a repo. So it depends on which side of that trade, you take.
Thank you.
So they were certainly. And anybody, if y'all have any questions, if I, like I say, I've got to get in the weeds a little bit so you can better understand what was going on and why it failed.
Yeah, and that's why I keep interrupting and asking questions, because some of the terms I don't exactly understand.
Not a problem. And if something I say doesn't make sense, y'all ask questions. Feel free. So basically, they were receiving interest from two bonds while they were paying interest on the loan. And the interest rate on repos is very low because it's a collateralized loan. So getting the interest on two bonds, paying a little bit of interest, it was a profitable trade. It's called positive carry. The interesting thing is long-term capital management would have about 75 to 100 of these existing at any point in time. And their lenders had no idea. Long-term capital was very, very secretive. If lenders had known how much borrowing they were due, they probably wouldn't have done it. One other swap that long-term would engage in was called a total return swap. Total return swap is simply where you exchange a floating rate of interest for the total return on an index like the S&P 500. So they would pay an adjustable rate of interest, probably be LIBOR plus 1.5. And LIBOR is just an international lending rate. So on these kind of total return swaps, the lending was much less. It can only be 40 or 50% due to regulations in the swap markets. But it still would enhance the return. Okay? Anonymous, Wall Street makes Willie Sutton look like a piker. They come up with some creative ways to try to make money. And sometimes you got to admire the effort. And other times, like tonight, it gives us, something to laugh about, to mock them about. So we already talked about long-term using leverage. How instead of a 5% return, they would get 100 or 150% return on a very small return. It would magnify it. The high leverage blew up the small incremental returns. Now, the flip side is, if you have a small loss on your position, that leverage magnifies your loss, because instead of a 5% loss, you've now got 150% loss. Not only did you lose 100% of everything you invested, but you owe an additional 50% of that amount. So magnify the returns, magnify the losses. The strategy that long-term capital was employing was this convergence. I talked about how expecting spreads between two bonds, and they were big in the fixed income market, the bond market. They wanted those spreads to return to their historical norm, which statistically was a good probability. And it was independent of any absolute change in rates. The idea is you buy the bond with the highest interest and short the bond with the lowest interest. As the rates converge, this strategy makes money. You've got the leverage. And long-term capital utilized this strategy during a good time. They were big in the European market. And in the 90s, Euro as a currency. So what this meant was all of their rates were starting to converge. Instead of having different countries issuing debt in different currencies, it was all issued in the same currency. So that kind of would force the rates to be similar, much closer, the spreads to narrow. And that's what long-term capital was betting on. Spreads did narrow considerably for several years, but the problem is that past is rarely prologue. What has been doesn't mean always will be. Obviously, things changed in the later 90s. You had, for example, the Russian default, which was a serious problem in the bond market. Oh, chunk. After the Russian default, bond prices in countries with good credit rose. Now, I don't know if you remember or not, but Russia defaulted on its debt, couldn't make interest payments. So that caused a crisis in the bond market. There was kind of a flight to safety. People started moving their money into countries with good credit, the ability to pay the interest. Those with poor credit or questionable ability to pay, the prices of their bonds dropped, so their rates increased. And instead of interest rates shrinking and converging, well, interest rates started diverging. Good quality, bad quality. So it started widening out instead of narrowing. And long-term capital management started losing billions. Losing billions is an understatement. They were getting, their portfolios were bombing. Bombing is an understatement. They were getting nuked. It's like the mother of all nukes. They were blowing up left and right. And long-term capital failed due to several exogenous and endogenous shocks. Now, exogenous, endogenous, those are big words that we use a lot in finance, but the idea is simple. It's in the system or out of the system. And endogenous is in the system. The system here would be the other hedge funds. Many of the hedge funds tried to mimic and imitate long-term capital management strategy. So they took similar positions. Well, they started bailing on those positions, which forced the rates to diverge even more. That's a problem in the system. Exogenous is outside of the system, like the Russian default. That's outside of the system of hedge funds. So long-term had bets placed on the narrowing margins, to historic norms. It would see a wide spread. It would bet on the spread narrowing. But in 98, spreads started widening and widening greatly. In some corporate bonds, they widened up to 1,700 basis points. That's 17% increase. An increase, how do I word this? The spread went from 5% to 22%. Huge increase. And as you can imagine, that sank the prices of the bonds. Then there was what we call the Asian tiger crisis. Same time, you had the Russian default, you had the Asian tiger crisis. The Asian tiger crisis was all the Pacific Rim countries had pegged their currency to the dollar. That means it traded with the dollar, had a fixed exchange rate. But the market rates had become greatly overvalued for the the Pacific Rim countries. And speculators doing what they do, sensing that, a devaluation in their currencies was upcoming, pounded the markets, pounded the mullets. Now, the central banks of these countries got involved and tried to support their currency by spending dollars. They would take dollars to buy their currency in the open foreign exchange markets, trying to decrease the supply. But they didn't have enough reserves. Their reserves ran out. So when they did, they had to unpeg their currencies. This created huge uncertainty, and markets hate uncertainty. They hate the unknown. And so it caused big issues with trading. This uncertainty in the foreign exchange markets caused a lot of those countries and investors in those countries to flee to safety, which the safest investment in the world over the past 30, 40 years has been U.S. Treasuries, short-term U.S. Treasuries. So as more people buy U.S. Treasuries, price goes up, interest rate goes down. So this pushed down the yields on U.S. debt, while other debt was sold in order to buy the U.S., which made rates on other debt go up. Again, you're getting more divergence, widening of the spreads. I've already, said the Russian default. Price of oil collapsed. The ruble collapsed. Rates were hiked. The central bank in Russia hiked the rates trying to save the ruble, which killed the local economy, killed domestic economy. The IMF, the International Money Fund, had to arrange a bailout, but it wasn't enough. And when the IMF gave up trying to bail out Russia with the Asian tiger crisis and everything else going on, everybody saw the signs on the wall and started bailing. This triggered something called contagion, which is what central banks fear the most, what investors fear the most. This is when you see the markets and businesses just start failing left and right, because businesses are interconnected with other businesses. If your major supplier or your major buyer fails, it increases your chance of failure. Banks will lend money to other banks, short term, but if that other bank fails and can't pay them back, we've talked about previously how banks can't take losses. So a failure in one or two banks can cause fails in other banks. Contagion. So all of this impacted long-term capital management. It hit other hedge funds. Just the cycle began to accelerate, and everything started feeding on itself. There's one other problem that the geniuses at long-term capital management had, and that was they saw themselves as trying to protect their downside risk, trying to hedge, as it's called. And they based their hedges on a system called VAR, value at risk. It's a statistical model. And it's a statistical model that says 95% of the time, this is your greatest loss you could expect. And so Myron Scholes, brilliant mathematician, ran the numbers and came up with this is how much hedging we need to do. And we'll be safe 95% of the time, which sounds kind of good. But if you think about it, if you cover 95%, but you don't cover the outside events, that other 5% is really when you need hedging. So VAR is a feel-good methodology that gives you a false sense of security. Because when things go to hell in a handbasket, you aren't covered. And that's what happened to long-term capital management. Statistically, now remember, they had a $125 billion portfolio. With long-term's VAR modeling, they estimated that their maximum loss would be $700 million a year. Well, in August of 98, on one day, they lost $550 million. The following day, they lost about $300 million. Every day, they were bleeding at least $110 to $120 million for the month of August. There were other feedback effects due to this. Market crashing, increasing uncertainty. Long-term capital management needed liquidity. Its lenders were drying up. Its counterparties, people that took the other side of those repos, were concerned about increasing risk, so they wouldn't extend the repos. They were less willing to participate and demanded higher and higher premiums. So basically, the kind of thing is everything that could go wrong was going wrong for long-term capital management. And they weren't hedged. They weren't prepared for it. Now, long-term capital had such extensive relationships in finance and was so big, particularly compared to other funds, other businesses of the day, that there was concern about if long-term failed, that it would really cause a severe international contagion effect. So long-term had borrowed billions and billions of dollars from banks who didn't know about the loans that long-term had with other big banks. Like I mentioned before, they wouldn't have lent anywhere near that much. Long-term was very, very risky to a bank. So long-term being so big, there was fear of a financial meltdown, international financial meltdown in the financial sector. Banks impacted included Deutsche, Credit Suisse, UBS, BOA, Citi, Chase, most of the American bank. And so the Federal Reserve got involved. The president of the New York Fed branch called together a consortium of banks to see about a rescue. Long-term's equity was down from $7 billion to $1.5 billion. Their portfolio had been just devastated. A week later, it was down to $600 million. So there wasn't much time left. Now, Warren Buffett, interestingly, made an offer for long-term capital. And I will spare you all the details. But to me, the interesting thing is that Buffett only gave long-term capital 1 hour to accept the deal. 1 hour. Now, Meriwether, who was handling the negotiations, had to get approvals to transfer the liability and the assets from all the different counterparties that they had positions established with. No way to do it in an hour. And you can't convince me that Buffett wasn't aware of this. So he made an offer that he knew would not be accepted. Why? I don't know. I haven't been able to figure out a good reason. Maybe just for the PR. Maybe he was getting pressured by the Fed to step in and do something. I don't know. But eventually, McDonough's consortium, the Fed, the New York Fed president, his consortium put together an equity offer of about $3.6 billion that was accepted, but it was a bitter pill. It was a bitter pill for those banks participating because they were all taking a hit on this. So they ended up buying the assets, liquidated long-term capital of the positions, closed down all the positions. Long story short, by 2000, all of the creditors had been paid off. The investors got about 1/10 of their investment back, so they suffered a 90% loss. A lot of people have referred to this as the Nobel bailout. Long-term capital lost $4.5 billion. And what does a $4.5 billion loss look like? Well, if you put it on a graph, the red line is U.S. Treasuries. You see their steady performance, increasing value with all this chaos going on. You see the Dow Jones kind of chopping around, had an increase, but this this vertical blue line, that's long-term capital management. Absolutely just caved. The values of it just absolutely caved. So this is a big event, not just because its impact globally at the time, but it gave rise to what I refer to as the bailout nation. This was the first bailout of the private sector by government, structured by government, paid for. The Fed kind of backed the deal. And some questions, to me still ought to be asked and haven't gotten good answers for. Why should the Fed bail out millionaires and billionaires? And keep in mind, long-term capital management was incorporated in the Cayman Islands. It was incorporated there to avoid U.S. taxes. And why help them, but not, Russia and Brazil and other countries that were failing and causing devastation in the U.S. markets, primarily to smaller investors? But to me, the big deal, the big issue was that the Fed created moral hazard. Julia, what year was this again? Well, the collapse started in 98 and the buyout occurred in late 99, early 2000. Sorry, the buyout occurred in 98 as well. It was culminated in 2000. But the Fed created moral hazard. What's moral hazard? Moral hazard is basically the sending of a signal to banks and investment funds, hedge funds, that if you get too big to fail, we'll bail you out. Do what you want, we'll bail you out. That to me was a huge signal to the markets. It's like Citi. They've been bailed out 3 times. Each time they come back bigger and worse. And if you're a large company or banker manager, if you're a large hedge fund manager, you're thinking, if I take more risk and we're profitable, I get bigger bonuses. But if I take more risk and we fail, we get bailed out and I still get to keep my job. Moral hazard. Do what you want, we'll bail you out. I've got a problem with that. Now, what happened to the principals? What's the aftermath? John Meriwether, interesting guy. This is the guy that led Salmon Brothers trading desk for a decade and just made them tons and tons of money. Well, Meriwether resurfaced pretty quickly. He founded his own hedge fund, JWM Partners. Let me get that right. Started a new hedge fund, advertised itself as a more conservative long-term capital management, a better hedged long-term capital management. The leverage was only going to be 15-1. Well, that fund grew to about 1.6 billion. Fast forward to 2008, JM has lost 300 million in his new fund. He lost a quarter of investors' money and closed the fund after losses reached about 45%. What did he do next? What do you think? Went out and started his third hedge fund, JM Advisors in Canada. As of a couple months ago, he had $21 million under management, probably most of it his own money. Not a mouse. Jeffrey Baker, the prefix is tri nowadays, not M or B. Can't argue with that. Jeffrey Baker, 100 million here, 300 million there. Before you know it, you're talking real money. You know, nowadays it's 100 billion here, 300 billion there. Before you know it, you're talking real money. But this all started with long-term capital failure. This is why long-term capital failure is so interesting to me. Scholes, Myron Scholes, the guy that Myron Scholes is a brilliant mathematician. I get involved in complicated math, but Scholes is out of my league. Brilliant mathematician. What Scholes lacks is a gut. To me, the best managers, portfolio managers that I've seen in the business over the past 40 years, they were smart people, but they had a good gut, a good sense of the market, where the market was headed, and they traded accordingly. Scholes has no gut. He's got such confidence or belief that his math is correct, and the math can be correct. You can work the formula out correctly, but it's the wrong application of the formula. C.S. Lewis, again, my favorite author, once said, "A single dream is more powerful than 1,000 realities." And that's true in the market. Perception oftentimes is greater or more powerful than reality. Scholes has no understanding, or had no understanding, of that. So after leaving $4.6 billion in losses behind him, he joined another capital company, Oak Hill, launched a new hedge fund himself, Oak Hill Platinum, where he served as president until 2008. It blew up. He then joined the faculty at Stanford and is now a professor emeritus, which is a honorable retirement, and serves as director for the Chicago Mercantile Exchange, which handles a lot of agricultural commodities and derivatives. He also, interestingly, serves as a chief investment strategist for Janus, large mutual fund family. Now, I hadn't been able to find out absolutely for certain, but I think his chief investment strategist responsibilities are really limited to writing an article once a month on the market. I don't think he has any real input in the management of the funds. Not that I've been able to determine. Merton, the second Nobel Prize winner. Merton's a quiet guy. Never really said much. He quietly went back into academia, and going through every bio of his I could find, even his wiki page, none of them mention his time at Long-Term Capital. He's currently a professor at MIT and has a one-line mention in his bio of being the resident scientist at Dimensional Holdings, where he is the creator of the target retirement solution. But even there's no mention of long-term capital management. But he has a money quote, and I love this quote, and I think it's very, very true in finance. He says, "My hope is that even if you're not getting all of the lyrics, you're at least getting the melody. These are executable ideas that can improve outcomes for investors. And that's really kind of the theme of this channel. Maybe not everything makes perfect sense, but hopefully it's adding to your understanding of the market, what's good, what's bad, what to look out for, and helps you make better informed decisions about your money. So, anonymous, Stanford faculty, any students named Bankman-Fried? Sam actually graduated from MIT. So wouldn't be he wasn't at Stanford. Now his parents were in the law school. I think they were both tax attorneys, if I remember correctly. But yeah. Those of us who have watched The Lawyers have some thoughts about Stanford professors. That's in the law school, not the finance school. Got to protect my field here. Got to protect my buds. Actually, Merton, I respect the guy. He screwed up royally and he shut his mouth and just went back to doing what he knew he could do well. He is much more. That wasn't me. That was Ellen and Chuck. Ellen's here, then she's not. Whoop, she's back. Now she's gone. Poor Ellen. She gets some grief. I hear her in the background going, I'm here. But she's not here. But she'll be here. So that's a brief overview of long-term capital management. A little bit of a discussion on what's going on in the market. And, as we've looked at several of these financial failures, there is some commonality. There's great hubris, arrogance expressed by the managers. Extremely favorable publicity. You have a lot of people piling on, trying to imitate them. And you have the aura of invincibility that it's going up and it's going up some more and it's going up some more. It can only go up. Is there something here that we can learn or use to evaluate other potential investments? Biggest problem I see from small investors is people trying to jump on the bus, but who jump on it too late. Look at AMC. A stock trading at $5 went up to $400. And the vast majority of people bought it at $200, $250, $300. It's now worth, I don't know, $12, $15. Never.
I'm sorry, I can't hear anything.
Never be in a hurry to buy something. There's always more opportunity. Julia, well, it's not just SBF's parents. There's a female Stanford Law School professor who was disparaging female lawyers and said mean things about Camille. I think there was at least one more. That would be out of my bailiwick. Ellen may know a little bit more about that, but that's news to me. Ellen still can't hear us. I think I've got the only working set of earbuds. Julia, wasn't that just Reddit stupidity? I can't honestly say. I am not sure. Ellen is still struggling with her earbuds.
I can hear you, but I don't think it's from where I think
earbuds?
It is. Yeah, it's coming from the computer, and I don't know why.
Probably because your earbuds aren't connected.
I have tried to connect them, Clay. Thank you. It says they're connected for voice. Why not listening? I don't understand. Is anybody hearing
Boomer?
echo?
Okay, Boomer.
Oh, stop it. And I can't, my iPad's not working either. Oh, for fuck's sake.
Oh my.
I can't even get to, I can't even scroll through the things.
That's okay.
Am I echoing?
No, you're fine. You're fine.
No echo. Okay.
No echo. We hear
That's
you
weird.
and you can hear me and
Well, perfect. Sorry. Sometimes in the community, we have some things that, thank you, Sandra, that happen. And we had to, sometimes you got to support others in their time of need. So, yeah.
Ellen giving us the vocabulary.
I am not a wordsmith whatsoever. I am just me doing me.
Yeah. Oh, I think you let the F word out.
Yeah, I did.
Yeah.
Actually, that is that's something that Secret McSquirrel used to always say, for fuck's sake. So that's my tribute to her.
Sometimes it fits.
It does.
Well, we've run a little bit over, which is not a problem.
No.
Over the next couple of weeks, we're going to take a look at the subprime crisis, both the cause, the event, and the after effects. So hope you'll tune in. If you're not subscribed, please subscribe, like. Don't let Chunk or Tallulah down. We'll try to quit stepping on them so often.
We don't step on them. I just walked and Chunk is the biggest wuss dog I think I've ever owned. And yes, new trick. Sometimes it does feel good to let the F word fly. It's a thing. But yet the Chunk.
It's not that you actually step on Chunk. If your foot passes too close to him, brushes past him, he screams.
I don't understand it. I don't understand his thought process at all.
You're both safe. Thank you. Looking forward to the next one.
Yes, we are.
Ellen didn't kill me last week. She's got more chances coming up ahead. But
no, you're going to be gone for like a month.
Well wishes.
Let's just hope I don't kill the roses. That's the biggest issue.
That would be a big issue.
Of course, I did save them, but as you know.
Yeah, they were in poor soil, and I traveled a lot during the summer. I was usually gone for a good bit of the summer, and so they weren't doing too sporty. And Ellen comes in and decides that she wants to dig them up, put them in big pots, and redo the entire bed. So put in better soil. So we do that, dig it down 3 or 4 feet, put in, topsoil, a little manure, all the stuff, and then replant the roses. 2 years later, they're doing a whole lot better. So I was kind of borderline on almost giving up on them. It was just frustrating.
Like 80 years old, this particular bush. It's not the best specimen, but they are thriving. They are still blooming, and that is a good thing. We love that.
Yeah. And that's a pretty bloom, and it's got a great fragrance. It's Mr. Lincoln. Mm-hmm. And it was my dad's, one of my dad's, and I have taken him with me everywhere I moved.
Yes, Julia, that's a real rose. That is, Clay and I have 8 rose bushes?
Yeah.
Yeah. So this is Mr. Lincoln. And then we have got Double Delight, Peace, John Paul, Voodoo, which is it smells so good. And then we have got the
Neil Diamond.
Oh, that's my favorite. Then we got the Black Rose, Baccarat. What's the purple one? Neptune. And then, did I miss one?
Nope, that's it.
Okay. And they are beautiful, and we encourage our neighbors to come and just cut them off if, they want some roses because they smell so good.
Yeah, grow them for people to enjoy them. That's kind of the whole idea. That's what my dad did, and that's why I've kept them. Julia, he wants to alert how close your foot was to him. He does an outstanding job of that. Outstanding job of that. Not a mouse. When you look at subprimes, compare recent activity in mortgage housing market. Are we going to see it again soon? I just saw today Rocket Mortgage was going to begin offering mortgages with a 1% down payment.
Here we go.
That's very, very subprimey. It's like we learned nothing from the subprime crisis. A lot of financial institutions are repeating the same mistakes. So, yeah, that'll be a topic of conversation.
I can't show your last. Why does my stupid taskbar decide that it wants to stay up all the time? Anonymous just said, Ellen, you put the whore in horticulture. Thanks. I can always count on you for those little remarks.
Julia, rose pictures would also make nice swoops. That's a good idea.
And Julia also suggested that I take a picture of the dogs running this week while you're gone.
That'd be cute. Yeah.
Swoop.
Or Chunk whining. You got that little short video of Chunk whining, talking to you?
Oh, it's on your channel. Yeah. He was talking to me. He talks to me all the time. No, you're not banned, not a mouse. You're fine. Oh, here we go. Now I can see it because you did another one. Oh, gone. Oh. I really don't know how to take that, not a mouse. Anyway, I was saying funny. Something. I don't know what it was.
I gotta admit.
Huh?
And like Ellen said, no, you're not banned yet. You need to try harder.
Yeah, you got to do a lot. I mean, I'm not that easily offended. Sorry. You got to do more than that.
Julia, we tried to get Runkle to get Zora and Potter to run by, but Nicole started animating them instead.
Which Nicole? The ADHD Nicole? Or there's like several Nicoles? Ha, 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 ha. Man, you are just throwing them out there today.
I'm just a little sad I didn't think about that. But being in close proximity, I don't have quite the same liberty.
No. And he does enjoy actually the food that my neighbor brings him from Lexington every other week. The barbecue and the pimento cheese and the slaw. He has no problem with those.
Food is always good. Food is love.
I guess.
Julia, aka ADHD Nicole.
Yes, I thought that's who you were talking about. I wasn't sure. I will have to reach out to her and see if she can do some swooshes.
Yeah, I like, having the pups run by would be cute.
Apparently, she made them into digitized Zora and and Porter. Or is it Porter or Potter? Potter. Into digitized running by swoops. I'm sure Anonymous said it with love. Yes, he knows where I'm from. He or she. I don't even know. Potter. Thank you, Catherine. Yeah, I'm from a very, very, very small town in North Carolina. A tiny little town. And Clay says I'm from the north. Barbecue has to be from backcountry barbecue pimento. Yes, Conrad and Hinkle. Hello. And the barbecue, no. Funny. Barbecue is from the Monk. I'm sure you know what that is, but Conrad Hinkle has the best pimento cheese on the planet.
It's really
How
good.
do you know that, Anonymous?
It's really good. I gotta admit. It just has a good flavor. I don't know exactly what they do different, but it just has a really good flavor.
Well, I mean, it's like Lauren Backcountry Barbecue. Dude, the Monk is the best. Period. Where is Backcountry Barbecue? In Lexington? I mean, I have a friend that I know from high school that still works at the Honey Monk. I'm still curious. Backcountry Barbecue. I have no idea.
Is it called the Monk or the Honey Monk?
Both. In the backcountry. Ha ha ha. I just love the Runkle. She wanted a dog and he didn't. So they compromised and got two. Yeah. Ian is, I have never met Mrs. Runkle. But Ian is just a gem. He is just the sweetest human on the planet. I can't say enough good things about Ian. He's always there when I need him. He's been there for me with the secret thing and okay. Sorry, I just saw Anonymous. Owner is Wayne Monk. His son Chip runs down. Yeah. Yep, that's the Honey Monk. But no, Ian is the greatest. And Anonymous, how do you know all of this? Russ Craver has worked there since he was in high school and still does. And he was a couple years older than me. Some stories just sounds fantastic. Okay. I'm sorry. I'm reading to myself. Okay. Anonymous. Who are you? Where are you from? This is like crazy. Secret stalker. Okay, don't pull that on me. Come on now. I remember that you told Clay that your name was Lauren because it was your N1ROL spelled backwards. Now I gotta look this up. Yeah, I know, apparently, right? Ha ha ha. I grew up. You grew up in Lexington? Why don't I know you? Oh, you're being creepy. You have my name. I have Lauren Anonymous. When did you graduate?
Well,
I'm sorry. I am like.
Yeah, we don't want to dox anybody on here.
No, we don't dox anyone.
Yeah, let's not get into
my interest.
Yep. Well, I'll let y'all take that offline.
All right.
We've had a good night. And it's a little bit past our normal time, but we really appreciate y'all coming out and joining us on a Sunday night. We know this is a little unusual. Had some obviously technical difficulties that we'll continue to try to work out and smooth out. But really appreciate y'all and your time. If you have any ideas for future discussions, please, let us know. Like I say, we'll pick up on the subprime crisis next week and look forward to seeing y'all then. Feel free to comment or DM me at Moffat on Money. My time is up. I thank you for yours.
Thanks for being here, guys.
Have a good night.
Night.